Today we are going to be focusing on payroll deductions. So to start off, let's do some vocabulary. You need to know a filing status. That means, are you single, married, head of household? You need to know number of withholding allowance that the employee claims. That's number of people typically. The type of pay period, so bi-weekly, semi-monthly, weekly, monthly, what we did in our last lesson, and gross income. More vocabulary, income tax. There's local, there's state, there's federal, and it's paid on your income. The federal tax withholding is how much the federal government is taking away from a person's paycheck. Your filing status, that's again, if you're married, single, head of household, it determines what kind of taxes are being taken out of you. And the W-4 form is the form you get at the end of the year. It tells you everything that has been withheld from you, what you made, and you use that to file your taxes. Last words, there's allowable adjustments to your gross income, which are IRAs, tax sheltered annuities, 401ks, employee-sponsored childcare, or medical plans. And it could be tax-free or tax-deferred benefits. So what I want you to have out when we do these questions is figures 10.2, 10.3. You have a packet of all these figures that we're going to be using to answer these questions. So if we take a look at this right here, this figure is a W-4 form. And it's something that you fill out when you get a job, and you get to decide your allowances. Right now, you guys who are working probably claim zero because there's nobody that you have as a dependent. There's nobody that you are providing anything for. It's just yourself. So your best option to claim zero so that they take out the most amount of money, so when it comes to the end of the year, you aren't owing the federal or the state government money. Some people claim zero. I do myself still. They take out tons of money, and then what happens at the end of the year, I never owe, and I actually get like a huge lump sum back. So it's sort of like a built-in bank account. Some people don't like to do that because they say the federal government's holding your money. But in my case, and a lot of other people's cases, we don't want to have a surprise. You owe the federal government $3,000, and then you have to pull that out of somewhere. So I claim zero still. It's all up to your preferences of how you want your money taken out of your paycheck. These are the forms we're going to be looking at. If you look at the top of this one, it says single person paid semi-monthly. So when you're reading these questions, you need to think about which form are we going to. This one here is single person semi-monthly, but more money. See, it starts at $800. And the next one is a married person weekly, starting at $0. And then we also have more, I think, below, maybe not. Okay, so example one. We have Charlie Strauss, and he has a gross semi-monthly income of $1,240. He's single and claims 3. He has no allowable adjustments. Find the amount of federal tax withholding to be deducted from his earnings. If I go back, you guys look in your packet. Here's your single, semi-monthly, but he makes $1,240. So this chart doesn't go up enough. It only goes up to 800. So I need to go to the next chart and say, okay, let's find out where 1,240 would fall. Well, he makes at least $1,240 and no more than $1,260. He claims 3. Here's 3. So I go down till I hit the same row. That would be $85. So he gets deducted out of his paycheck $85 in federal tax. Next person, Barry Strawn, married. So we're using a different table. And he gets paid $1,367 and also claims 3. I would use this table here for married and find the $1,367, which actually falls between $1,360 and less than $1,370. Go over to column 3. You guys can be looking at your packet and find out that he makes or gets withhold $132. So this is figure 10.2, and this one I looked at figure 10.3. So you're using that table to find out the withholdings based on their allowances. Next one. We have another married person making $615, claims 2 this time, and also has allowable adjustments of 30. I'll show you how that works. First of all, we start with figure 10.3 again. We figure out where $615 falls. So if I'm going down this table, 615 would fall between 610 and 620 right here. Actually, no, hold on. Go back. We have to take the 615, subtract the $30 allowable. Don't forget about this. To say that 585 is what we are taxed on. So now we go back to the table and say, where does 585 fall? So I'm getting rid of that. 585 falls right here between 580 and 590. And claims 2, so I'm going to go over to this column, and it's $28. So they are getting withheld $28. Okay, go ahead, pause the video, go out to the stop and check right there, try the problems. When you are done, come back and we will continue on. Okay. Sometimes, instead of using tax tables, you can use tax rates. That's what many companies will do. There is a certain rate for federal tax, there's a certain rate for Medicare tax, there's a certain rate for withholdings. So find the exemption per allowance amount from a table. It depends on the type of pay they have. So if we look at this as a new figure, 10.4, this is in your packet as well. It tells you if they're weekly, one withholding, $73. If they're bi-weekly, one withholding, $146. So we're going to use this table now to answer the next question. It's called the percentage method. So it says find the percentage method income if they make $3,150 bi-weekly, that's important for the table, and has no adjustments, is single, and claims 2. So if we go up to the table and look at bi-weekly, go across, $146.15. We write that down, $146.15. Now how do we do the 2 withholdings? You multiply by 2. That gives you $292.30. So that's telling me the withholdings. Also, because Macy has no adjustments to her income, her gross of $30,150 is her adjusted income. So you take the $3,150, subtract your withholdings to get how much she's going to take home, $2,857.70. Now, to find, for example, 5, find the federal withholding tax for Macy. We will use this figure. This figure is 10.5. So how do we use this table? If we look at the table, she is paid, if we scroll back up, bi-weekly. So we're going to focus on bi-weekly. She is also, is she single? Is she married? She's single. So we're looking at bi-weekly single. So I'm right here. Bi-weekly single. She makes $2,857.70. What this table says then, if you look here, she falls right between these two numbers then for how much she makes. For the 2,000 or even the 3,150, she falls right there. What does that tell me? Her withholding is $187.15 plus 25%, anything over $1,442. What in the world does that mean? What you do is you take her salary we found above, $2,857, subtract the $1,442 to give you $1,415.70. That's her excess over the $1,442. You multiply it by the 0.25 because the table above says 25% over the $1,442. That gives you $353.93. What I also have to include, back to the table, is this right here. It's $187.15 plus the 25%. So I've got the 25%. I must add on the $187.15 to get the total federal withholding tax of $541.08. Okay, go try the stop and check. Use your figure and figure 10.4, 10.3 to answer the questions. Come back when you're done. It's 10.2.3. Find the amount of earnings subject to be taxed less than or equal to $110,000. Social Security tax are currently capped at $110,100. So you take this tax, 0.042. This is very important. Remember this. We're going to remember this rate. This is for Social Security. The rate for Social Security is 4.2%. Medicare, this is very important as well. Another rate we must remember is 1.45%, or is the decimal, which we will use, 0.0145. Here's an example for you. If Joe makes $1,654, how do you find out the Medicare or the Social Security? You're going to multiply it by the percents. Employers also pay 6.2% for Social Security and 1.45% for Medicare. And a self-employed person has to pay both 10.4% for Social Security and 2.9% for Medicare. So you're multiplying them by 2 compared to an employer. Employer pays 6.2%, self-employed pays 10.4%, and then Social Security 1.45%, self-employed pays 2.9%. So let's practice this. She has a gross weekly income of $967. How much Social Security and Medicare should be withheld? Every time you do this, you need to make sure that the person is not over $110,100. That's the cap for Social Security. So we start off by saying, well, how much does this person make a year? Well, $967 weekly means multiplied by 52. They make $50,284. So they are less than the $110,100. So that means the entire salary is going to be taxed. There's no exemption here. So to find Social Security, you take their weekly pay times the Social Security rate of 0.42 and find it to be $40.61. Medicare, take their weekly rate, multiply it by the Medicare rate, $14.02. So that's Social Security and Medicare. Okay, I can only record 15 minutes at a time, so I'm going to stop this video here and start a new video so you can exit out of here and click on the second video for this lesson.